And lastly, what are closing entries? Closing entries are basically entries that transfer all temporary account balance to retained earning at the end of fiscal year. And there are three closing entries. The first one is to close the revenue accounts to income summary. So income summary is another temporary account. The entry is basically we debit all of the revenues, all kinds of revenue, because revenue has a balance at the credit side. So in order to close it out, we need to debit all different kinds of revenue and we credit income summary. This is the first closing entry. The second closing entry is to close expense account to income summary. So we debit income summary and credit all of the expense, cost of goods sold, salary expense, depreciation expense, all of the expense that you have. And because expense, the balance is at the debit side, in order to close it, we need to credit those expense. And the third closing entry is to close the income summary. So income summary, as we just mentioned, it is a temporary account, and we need to close that out as well. So we close the income summary account to retain earning. Depending on whether revenue is bigger than expense or expense bigger than revenue, we either debit or credit income summary, and we close it to retain earning.